Don't let yourself fall asleep on the currency market. This is the warning of my guest today, who says what happens with the US dollar will determine price action in stocks and commodities. Carley Garner joins me today of DeCarli Trading. She is a best-selling author and a frequent contributor on Jim Cramer's Mad Money. She joins us now. Carley, so good to see you.
Thank you. It's good to be here.
Obviously excited to get your thoughts here. You say, you got to pay attention to the US dollar here to determine the path forward. Talk to me about that.
Right. So the currency market doesn't get enough credit for driving prices as much as it actually does. And I think there's a lot of complacency built into the tape. And what I mean by that is everybody has just accepted the fact that there's going to be dollar weakness and it's going to be persistent. And I don't think that's going to be the case. I actually think the dollar has probably bottomed. And I think we don't just bounce. I think we probably bounce, let's just say more than a bounce. I think we could see the dollar index, which is currently roughly around 99. It bottomed somewhere around 97, so we're just a little off the lows. But I think we're probably looking at somewhere in the 108 to 110 area, which retraces most of this sell-off. And there's a lot of reasons I think that, but one of the primary reasons is during Trump 1.0, the dollar basically spiked up as Trump was entering office. It broke a trend line, turned out to be a fake breakout, and it sold off about 15 points. And we've seen that exact same scenario play out in Trump 2.0. And if this pattern is going to repeat, if we're following last administration's pattern, we should see the dollar rally pretty nicely up to the top of a trading range. We can't see the future, but we have history as a guide, and I'm using that. And why this is important is the higher dollar is going to thwart a lot of the rallies in commodities. Assuming I'm right, maybe I'm wrong, but I don't think I am. If I'm right about this, the copper rally is probably on its last leg. Gold is going to really struggle moving forward. In fact, I think gold could see a very big correction. And I don't follow silver as closely, but silver would also follow into corrective mode if that's the case with the dollar.
Let me play devil's advocate here because obviously I know you follow the technicals, but if we look at the discourse or what they're perhaps planning behind closed doors, I would argue this administration wants the lower dollar.
I think that's true, but the administration can only control so many things. I mean, 50% of the transactions that occur on the international banking system are US dollar. It might even be a little higher than that. So there's a lot of working pieces here. And um, the interesting thing about the dollar weakness is it's been kind of a sell America trade, right? It's probably more sentiment than reality. And what I mean by that is if you look at interest rate differentials, interest rates in the US are much higher than most other developed countries. And so if you're somebody that's overseas and you have a choice of where to put your money, I'm not talking about stock market investment, but if you're looking for yield and lower risk, you're probably looking for some sort of bond, sovereign debt instrument. And if that's the case, it really just makes so much more sense to put your money in US debt, which means buying the dollar to do that because you're getting more return for less risk.
You mentioned commodities, so let's go down that list. Let's start with copper. And what you said you could see some weakness ahead for copper. Talk to me about that.
I think what we've seen in copper is a bit of a capitulation rally. I mean, to be 100% honest, we've been expecting dollar strength, and so we actually were playing the downside prior in copper. Sorry, prior to Trump's announcement of 50% tariffs. So we went along for a little bit of a ride there. Got caught on the wrong side of that. But in the big picture, I think that it's probably going to work out. I think that copper, like all of the good news is out. The economy's humming along, stock market's humming along, but I think there's so much leverage in the system. I think some of those economic numbers might start to look a little bit softer as we go forward. And if, again, I'll go back to the dollar, if the dollar rallies like I think it does, even if the economic numbers and buoyancy in the economy stays the way it is, copper will probably drop a dollar just on the difference in the currency valuations.
Moving to gold, Carly, I know you mentioned what the strong dollar could do to gold, but we have seen in history strong dollar, strong gold.
Sure. So the last handful of years, you're absolutely right. The dollar and gold have been rallying together, or I mean, we're talking pre-liberation day kind of stuff. But there's been a stretch of time here just recently that the dollar and gold moved together. I think we're going into a more normalized environment, and if that's the case, they're going to start moving inversely again, like they have throughout most of history. So I'm expecting dollar up, gold down. I think that the gold market, a lot of people are pointing out on a chart, if you look at like a monthly or weekly chart, we're in a really big consolidation phase, bit of a pennant or flag pattern, whatever you want to call it. Most of the time, this is a continuation pattern, but I don't think this time is. I think this is different. This reminds me a lot of 2011.
Mm.
In 2011, post financial crisis, we basically saw three really large waves in the gold rally. Then it had this extremely exuberant last hurrah type of blow off top. And I think that's probably what we saw when we saw gold move to 3,500 a few months ago. I think that was what that was. And, jury's still out. Maybe we hold support. Maybe I get surprised, but I don't think so. We're kind of viewing this as a sell the rally market. So we sold the rally last week. We're now flat. We're hoping for another rally so we can get back in, but I don't think it's a time to buy gold. So if you're wanting to buy gold, be patient. I think I'm going to throw some numbers out there that probably aren't going to make your viewers very happy, but if we're repeating 2011, which I think is the most likely scenario, if that occurs, we could retrace this entire rally. That puts us back into the low 2000s, maybe even 2000. And I know that sounds a little bit crazy, but that's how gold has traded historically. It's a if your time horizon's 30 years, gold goes up almost all the time. If your time horizon is 10 years or less, your timing has to be considered because timing is very important.
Yeah, well, we like to bring varied opinions, obviously, to the show, and obviously, I'll just throw it out. I mean, look, if gold is going lower, you can make the argument that's the time that you'd want to buy, because if it does rally higher, then obviously you want to buy lower. So I always invite everyone to reach out to my colleagues at ITM Trading to book that free strategy session to get you started. That said, any news on silver? Because they were, a lot of folks excited. Were we going to get back to the all-time highs of silver?
Right. So I don't follow silver as closely as gold, probably because I have a little bit of PTSD. Silver is a really tough market. It's not as liquid as gold. We do a lot of option trading in our brokerage. The options are pretty thin. I mean, they're tradable, but it's just not the ideal trading conditions for what we try to do here in this office. So we don't do much with it, but I do chart it. I do have opinions. There's kind of a widespread acceptance of the idea that gold has outpaced silver. Silver is going to have to catch up to gold. I actually think that's not what's going to play out. I'm going to go back to the 2011 reference. In 2011, it was silver that was outpacing gold, and everybody assumed that gold was going to catch up. And in reality, what happened is they both rolled over together and they both sold off. Gold probably sold off a little less than silver did just because of the dynamic. So in this cycle, we might see silver sell off a little less than gold, but I think that's probably what's going to happen again. Um, there's fundamental reasons, but it's also just everybody's long. The metals are a great buy and hold market in the long run, but in the short run, they can see some pretty treacherous corrections, and it's been my experience. You want to be a metals bull when everybody has given up on it or when nobody wants to buy it. When everybody wants to buy metals, I get a little bit skeptical. Of course, I could be wrong, but there's a lot of people really long gold and silver, and if they're triggered to liquidate at the same time, it could get pretty ugly in the short run.
Yep. I mean, I could also make the argument, at least what I'm seeing and from various bullion dealers I've spoken to, is that the retail investor, despite this gold rally in North America, has not showed up yet. I mean, Costco
It's
aside,
yeah.
right? I mean, I'm talking.
I mean, yeah.
So the
I was just
retail,
gonna mention Costco. Yeah.
yeah, Costco aside, I don't know if we've seen the retail investor really step in here yet, Carly.
It's interesting. It's so hard to measure because there's so many ways to gain exposure in gold. You've got some people buying, micro, mini, or
For
even full
sure.
size gold
For sure.
futures. You have other people buying bullion. You have some people buying at Costco. Then we have ETFs. So there's so many different ways to get long gold. I think it's really hard to measure.
Wow.
On the futures side of things, people are pretty heavily long gold, and um, I talk to a lot of people that are holding gold bullion they don't want to sell, but what they're doing is hedging. And I think that's really honestly the
Yes.
way to go about it. So if you're holding a lot of physical gold, don't be afraid to hedge yourself in the futures markets. There's option strategies you can use. You can, lots of things you can do to protect yourself.
We know Ray Dalio is definitely holding a ton of gold. Um, Carly, let's wrap with this. Just overall view. I mean, where do you see the S&P headed, given all this?
Okay, so I'll share a chart with your viewers as well on this on the S&P. I shared this same chart with Jim Cramer last week.
Yeah.
I I'm not a pessimist. I'm not someone that's doom and gloom, but what I see when I look at the S&P chart is we're coming up against a monthly trend line that's been intact for multiple years, and every single time we've reached that trend line with the RSI, it's the relative strength index. It's an oscillator I use to determine overbought or oversold. Anytime we get to this line and we're overbought, the market sharply rejects it. Then I look to see where I see, pretty good support, and it's quite a ways down there. We're talking like low 5,000s is where the good support comes in the S&P 500. So in my view, there's a lot of risk to try to make a couple extra points in the S&P. I don't think it's worth hitting the gas here. I think if I was exposed to stocks, I would probably pump the brakes and let's see what happens, because there's a pretty good chance that we get some seasonal weakness here in August and September. And who knows what the news is going to be. I mean, it changes daily, but if there's something to tip the boat, it could be maybe not what we saw in April, but maybe something almost as scary.
Wow. Okay. Final point though. What's your overall take on the U.S. economy? I mean, if I had to
So
ask you to
obviously,
gauge the health, yeah.
yeah, right. So I'm not an economist, so just take my opinion with a grain of salt. But what I can say is the numbers look great, right? You can't really argue with the headline numbers. But when I look under the surface, I ask myself, how did we get to these great numbers? And I think the answer is leverage, and that makes me a little bit nervous. Starting to see some similarities between now and what I saw in 2006, 2007 ahead of the financial crisis. I'm not saying we get a global meltdown and we repeat that, but what I'm saying is the market, the economy, and participants in both are just not recognizing the risks that are out there. I think there's a lot more risk in the system than people recognize. So if you look all the way across the board, consumers are levered up by credit cards,
Yeah.
personal
Yes.
loans, all these
Yes.
sorts of things. The market is the same way. I get people calling me all the time. They want to buy Bitcoin or gold using their credit card. We can't do that. It's against the rules for us, but there are actually some brokerages set up in different ways that can do that. So people are buying risk assets on credit card. This is not a good sign, and it's not healthy.
Wow. Yeah. I think that's a really good statement to make here, that there's a lot more risk than people are perceiving. Carley Garner, thank you so much for joining us. Come back
Thanks for having
soon,
me.
okay? And thank you for watching. We'll have more great content coming your way. Be sure to stay tuned to the Daniela Cambone Show here on ITM Trading. And of course, subscribe to our YouTube channel. We'll see you soon.